But LIC, they posted their numbers as well. Mixed set of numbers that came in Q2 FY26. New business premium saw a rise as well. And Yash Jain caught up with the CEO of the company as well as the managing director of the company. And he started by asking about the slowdown in the retail as well as the total AP listed.
As you told, Yash, the top line performance for the first half has not been up to the expectations. But we had the reasons for that as well. Two things. One, last year on 1st October, there was a master circular which was rolled out and all the insurance companies had to become aligned to them. And as part of that, LIC had to modify the existing products which existed on 30th September. So we had a very high September last year because the existing products are going off the shelf, and the new products that were rolled in, they were realigned to meet the requirements of the master circular. So we had to increase the minimum ticket size in the most popular products of LIC, which resulted in a contraction of the total number of policies sold, particularly in respect of those ticket sizes between 1 lakh and 2 lakh.
Correct.
So that numbers we could not repeat. So that effect also continued because the first half of last year was very heavy.
Yes.
So on a large base, we found it difficult to match in the current half year. That is one part. Second, Government of India rolled out the GST reforms in the first week of September with effect coming from the 22nd of September. So after the date of announcement, there was a reduction, or you can even say a stoppage of people willing to buy life insurance in anticipation of life insurance becoming cheaper from 22nd. So there was a loss of business opportunity for us between the 6th and 22nd of September. And the last 8 days, which are very good, could not compensate for the shortfall that we
22 days.
That working day that we lost. These are the two reasons for our top line not being in alignment with what we expected. But the traction has now is totally different. We are seeing a good volume of growth in the second half, just started in October itself, and I'm sure the second half will be much better than what we saw in the first half.
Okay, quickly, 2-3 numbers. What is the APE and the retail APE growth, the number that you expect for second half, and where would that take you for the full year?
We are looking at our decent growth over the full year APE growth. That's what. Though I would not like to fix a number. I would like it to be in the double digits. That's what I would certainly look at.
Okay.
And the performance has already started showing traction in the second half, and I'm sure that we are comfortably doing that in the current year as for the full year.
Okay. As far as VNB is concerned, that saw a good performance in the quarter as well, growing at about 9%. For the full year, FY26, what is the guidance on the VNB? If you could put that number.
You are looking at VNB or margins?
VNB.
VNB, we expect it to continue to grow. Okay. That's what we are looking at. We are not giving any guidance. We have not been giving any guidance regularly, but only thing is our continued effort and focus will be on to show a good growth. When we do business, we have to necessarily work on the financials as well. So we are looking at products offering us a good VNB, and that I expect it to grow. Okay. Though there will be an impact of the GST's ITC not being there, we are trying to get it compensated by way of a good top line growth.
Okay. Strong traction as far as AP is concerned. VNB continues to grow. Now coming on to the margin band, you've done 19%, which is a very strong performance on the margin front for, of course, the second quarter. It's up about 100 basis points from a year ago. Confident of crossing that 20% mark for FY26?
Again, I don't keep a particular number in as target for any of these parameters, any of these metrics is concerned. We would like to continue to work on improvement. See, year on year, if you look, the VNB margin starts at a lower level in the first quarter, keeps increasing as we reach the end of the year.
Correct.
The end of the year also will have the component of PAR coming into the entire thing, and so naturally there will be a good increase on that. But in the current year, we have to be a bit cautious also, because we are looking at the exemption of life insurance, individual life insurance business from GST, resulting into the input tax credit not being made available to us. So we need to be cautious about it, but we are confident that the continued focus and efforts that we put in will result in a good top line growth And that top line growth, along with our rationalization of expenses, which has been happening for quite some time now, will be able to compensate for the loss of GST input tax credit to a great extent, though we will not be able to completely take care. So we expect the top line growth to compensate for our this thing. We expect this margin growth to continue for, but though not to the original expected level, but we'll be able to manage. That's what we are looking at.
Okay. How much short do you think would it
we are actually our aim is to see that it doesn't impact us at all.
Okay. Now I just want to understand, of course, you said that a strong top line growth would compensate for the additional cost that comes through GST. In the second quarter, what has been the impact on VNB and margins because of input tax credit not being there, inverted duty structure not being there, all of those things? And for the year, how much FY26? And because FY27 will be a full year of GST impact, what kind of impact after taking all the measures that you're talking about?
We don't want to guess or predict a number right now. But we have already given the investor presentation, which also contains the VNB walk. So we are looking at effect of the assumptions change. Having a small effect, as we have given the numbers. There is a negative impact because of the economic assumptions change as well as the expenses assumptions change. So it's not very high.
So less than 100 basis points on VNB?
That's what we are looking at for the first half of the year. But it's not necessarily VNB. It's all components put together.
All components put together.